Hi, good afternoon everyone. Thank you so much for coming up and attending our event today. It's so good to see everyone physically here at our new Savills event square. So for today's seminar, Savills Singapore is proud to have this joint collaboration with Capricorn Financial as well as Select Property Group. So our seminar today is knowing your financing options, how to borrow from the UK banks versus Singapore banks. My name is Rachel Ho from the Residential Services team of Savills Singapore. And just a little bit of introduction to Savills, if you don't already know. We are listed on the London Stock Exchange and we employ over 39,000 people across 16 countries worldwide. Our vast network allows us as a service provider to offer advisory and transactional advice to our clients. So, and with that, I'd like to invite Sam Lee, APAC Director of Capricorn Financial, to share his expertise on the financing options that you may have.
I'm Sam from Capricorn Financial. So we are a mortgage brokerage headquartered in London. So we're the biggest mortgage brokerage in London, but I'm based here in Singapore. I specialise in helping non-UK residents to get financing on UK properties. So I'm going to talk to you a little bit today about, first of all, introducing Capricorn Financial and the service we offer, talk about the different features of UK lenders versus the Singaporean lenders, as well as the process involved to apply for a loan with the UK banks. So just to cover a few points, Capricorn, we've been around for about 17 years now. We've also got an office in Singapore and in Hong Kong. Within Capricorn, we have a few areas of specialisms. So, of course, international mortgages is one of the big things we deal with. So, we've got clients all over the world looking to borrow in the UK. We've also got a commercial team that will deal with commercial properties or specialist mortgage lending, bridging finance, development finance, and so on. And we've got a private clients team to deal with high net worth individuals and large loans. We're a whole of market mortgage brokerage, so what that means is we have access to all of the lenders in the UK, and we do also have relationships with some of the local Singaporean banks as well, and we're regulated by the FCA in the UK. So this slide here is showing you our product wheel. So these are just some of the lenders that we're working with. There's actually quite a few lenders outside of this list. These lenders here on the top right hand side of the screen, these are your high street banks in the UK, and most of which would only lend to UK residents. For people based in Singapore and elsewhere in Asia, we tend to use the lenders in the bottom left-hand column. So some lenders you'll be familiar with, banks based out here like UOB and Maybank, also HSBC, Bank of China, Barclays, they all have good presence out in Asia. But then there are quite a few lenders that perhaps you've never heard of. They're not household names, but they are set up to assist non-UK residents, and they do offer some good features. Banks like Gatehouse Bank, Arley United, Hampshire Trust Bank, not lenders that you particularly would have heard of, but they do have some good features and some good products as well. We do have some other lenders on the left-hand, so on the right-hand side of the screen. Those private banks are also good for non-UK residents, though some will have minimum loan amounts of perhaps £1 million plus. And there are some commercial banks that could also lend to non-UK residents, whether it's a commercial or a residential property, in fact. So to give you a bit of an update in terms of the mortgage market at the moment, you may well have seen that the Bank of England base rate has increased recently. So the Bank of England is the central bank in the UK, and they set the base rate, which is the rate at which banks can borrow money at. It was at 0.1% this time last year, which was an all-time low, I must add. It was put to that level off the back of COVID to help recovery. Because inflation is now quite high, the base rate has been increased. It went up at the start of the year to 0.25%, and then again just a few weeks ago to 0.5%. It still is very low. If you look at historical terms over a 20-year period, you'll see it is actually still very low. Though there are forecasts that it may increase over the next 2 or 3 years, but we're not looking at any particular sharp increases, just gradual ones. But of course, there are a few uncertainties in the market at the moment. In terms of the current appetite for lending, I'd say it's quite strong at the moment, certainly stronger than it was a couple of years ago once COVID first hit. And in fact, we saw at that point a few lenders step away from the market and stop lending temporarily or altogether. But since then, banks have a lot more appetite for risk and confidence in the market, so they're back lending to pre-COVID levels. And actually since then, we've seen a few newer lenders enter the market as well, which is adding a bit more competition and of course some more options. So at the moment here, there are some good options, and with Capricorn, we do have access to some exclusive rates actually. So because of the size of our company and the amount of business that we do in this region, we have managed to negotiate some exclusive rates with certain lenders, so we can get discounts of the headline rates or even off their fees as well. So in terms of UK versus Singaporean mortgages, so there's a few points that I'll highlight. So first of all, with the UK lenders, you can get either a principal and interest mortgage or interest only. So interest only, the Singaporean banks tend to not. And what that means is you just need to service the interest payments on your mortgage. So you're not paying off any of the principal at all. The benefit of that is really just from a cash flow perspective. It means that your outgoings are far less. So if you're looking purely from an investment standpoint, it may be better because then you know your costs are all going to be covered by the rent. Whereas if it's principal and interest, particularly if you're having to go for a shorter term, you might be in a situation where you're having to top up a bit each month. Furthermore, with the UK lenders, it is possible to get up to 80%. I'd say there really is only probably one or two lenders up to 80%. More realistic is 70 to 75%. The local Singaporean banks tend to lend to 70%. However, if it's a second property, that can be restricted even further, as I'm sure you're aware. In terms of how they work out the affordability, well, each lender in the UK has a slightly different approach. Some is based on a minimum income level, some is looking at overall affordability, and many are just looking at the rental income alone. Singaporean banks tend to take the same approach. They're all restricted by TDSR, and as I'm sure you've seen, that's got a little bit stricter more recently due to the cooling measures that have been introduced by the government here. The UK banks, you can get lending all across the UK, whereas I know some Singaporean banks, they may only lend in central London. So buying in Manchester, Liverpool value, not going to be a problem. The UK banks don't discriminate, which is obviously quite useful. And in terms of when you're going to start paying the mortgage, it's the same either way. You start paying the mortgage upon drawdown of the loan, so on completion. With the UK lenders, you would normally look to apply about 6 months before completion, because mortgage offers are only valid for 6 months. With some Singaporean banks, we can apply even sooner, up to 2 years in advance, which is good that you can kind of lock in the approval now. But then if you decide not to take that approval, then normally it does come with an exit penalty. So it's not always good to lock into something that you're not guaranteed to use, which is the final point. So moving on from that slide, we're just going to talk to you a bit more about the different lending policies from UK banks. I think some of these points I've touched on already. Just to delve a bit more deeper into the income requirements. So some banks in the UK, they will have a minimum income to be able to evidence in order to qualify in the first instance. But with some banks, that's as low as just £12,000, so it's very easy to qualify. But normally we need to evidence that by way of a pay slip or tax return, so it needs to be fixed income. Other banks, they don't necessarily have a minimum income. They'll lend just based on the rental income of the property. Whereas some banks, they're looking at overall affordability. So really, in terms of the best lender for you, it really comes down to your individual circumstances. And that's part of our job, is to understand what the lenders are offering and their policy, and to line you up with the most appropriate lender. In terms of the rates on offer, that does vary depending on the loan to value, or LTV. So the higher the loan to value, which is the higher the ratio of the loan against the value of the property, then normally the higher the interest rates would be. If you want to get the best interest rates, then normally I would suggest looking at around 60% loan to value. That tends to be the sweet spot, I would say. We can also look at remortgaging as well. So if you already own property in the UK and you want to remortgage to get a better rate, or you want to remortgage to take out some of the equity, because perhaps you bought a few years ago and the equity is now built up, we can do so. And by taking out that equity, you can then look to invest in further property or in other markets as well. We do offer guarantor mortgages from certain lenders. So if you were to buy the property in the name of your spouse or your child, but if they don't have the income to get a mortgage on their own, then you can come on as a guarantor in order to qualify for the mortgage. And there may be benefits of putting the property in your child's name, for example. Maybe they're the ones that are living in the property, which can help save on stamp duty. Might also save on inheritance tax if you're doing some estate planning there. So if that's something you're looking for, then we can offer guarantor mortgages in certain instances. And the banks will also have rental income stress tests. So for lower yielding properties, like those in central London, for example, it can be more difficult to borrow up to the higher loan to values. But if you're buying in Manchester and you can expect a more healthy yield, then there's a better chance of being able to borrow up to 75% or even beyond. So just to touch on the costs and fees rates. So the typical range of interest rates for a buy-to-let mortgage would be between 2.5% to 4.5%. So it's quite a big range, and lenders do vary quite wildly in terms of the products that they offer. And what would help to get a better rate would be, as I mentioned earlier, like a lower loan to value. But also, if you have a lower perceived risk to the bank, that would help you to get a more attractive rate. So higher income helps. If you already own a property in the UK, that can actually help you to access more lenders and therefore potentially lower rates. And the type of product as well. So you may go for a floating rate, which you could normally expect a lower interest rate. But it is variable, so it could change over the years. Or you could lock in the rate and go for a fixed rate. You can fix the rate for up to 5 years, but normally you're going to pay a premium for that, so you can expect a higher interest rate. We can also arrange residential mortgages, so this is if you're buying for personal use or for your family to stay in. And for residential mortgages, we can offer some even more attractive rates, sub 2% in some instances. Because we can access some of the UK high street lenders for this type of lending. Of course, it does need to be used for your personal use, it can't be let out. And the lenders do look very closely at your personal income and affordability to make sure that you can manage those monthly payments. I touched on the point before where the more deposit you're putting down, the more products we'll have access to. In terms of the fees from the lenders, so this does vary. Some banks charge a flat fee. It could be as low as £1,000. It can go up to a percentage of the loan amount. The highest we see is about 1.5% of the loan amount. I'd say on average the arrangement fee is about £2,000. In terms of the maximum tenure, I get asked this quite a lot. In terms of what age can you get lending up to, that also depends on the lender. So some banks, they'll lend only up to your retirement age, so potentially up to age 65. But we do have banks that can lend up to age 85 or even beyond that. So we can get, even if somebody is 50 years old, we can potentially get a 35-year term. And as I mentioned earlier, we can do the interest-only mortgages. So let's say you could only get a mortgage up to your retirement age and you're 5 years from retirement, and you're concerned that your monthly payments are going to be expensive, just paying it off over 5 years. Well, an option is just to set it up on an interest-only basis. And you may be concerned that, okay, if it is interest-only, how are you going to pay off the mortgage? Well, you can still make lump sum overpayments with interest-only mortgages. Or if your plan is to sell the property in a few years anyway, then when you sell the property, that's when you would redeem the loan. Okay, I'm going to talk to you about lending to corporate structures. We do have quite a few clients that are wanting to set up a company and buy the property via that company, which is fine, and that's something that we can assist with as well. Just worthwhile pointing out that not all lenders do lend to companies, so it's going to be a slightly restricted pool of available lenders, and therefore the rates may sometimes be higher, but sometimes not. Normally that company would need to be a UK company, so if it was a Singapore company or British Virgin Island company, it's going to be more challenging, but not impossible. We have done that. The actual owners of that company will still need to be liable for the mortgage, and they need to provide personal guarantees. So just because the company is a separate legal entity, you are still liable for that loan. So it's worth bearing in mind. Sometimes lenders can use more lenient stress tests if you're buying through a company, because your net position in terms of your rental profit will be slightly better in some instances if you're buying through the company structure due to, in some cases, lower tax treatment. And for that reason, they can allow you to borrow slightly more if buying the company structure, so that's quite a big benefit. But because you're buying through this structure, it can lengthen the process slightly, because on the legal side of things, there may be a few extra requirements, such as independent legal advice and so on. So I'm going to talk to you about the actual process involved in applying for a mortgage. So if you were to come to us, the first thing we look to do is set up a one-to-one meeting, get an understanding of your requirements, of your circumstances, and then we can go away and make some recommendations from the available lenders. So we can normally send you 2 or 3 different options from different lenders. We can then have the loan approved in principle, which means we would approach one of those lenders with your details, and within a day or two, they will be able to confirm whether or not you're eligible for the loan. Then once you're ready to proceed with the formal application, we would look to gather any supporting documents and submit your application to the bank. So we would need documents to evidence your income, your source of deposit funds, your identity. So we'll help you to gather that. So we're going to meet at our office and then present that to the bank on your behalf. There's a few other things the bank would need to do, as well as underwriting the loan. They also need to assess the property. So they would send around an independent surveyor to do a valuation of the property. They do an appraisal of the market valuation and the rental income, and this can all feed into their stress test, of course. The whole process normally takes about 6 to 8 weeks, and this does vary from lender to lender. And once the mortgage is fully approved, it's then valid for between 3 to 6 months. So that's why we need to wait until closer to completion to actually apply for this mortgage. But the approval in principle can be done at any point. If you want to do that well in advance, then that's not a problem. Normally, once the mortgage is fully approved, it's best to allow still another couple of weeks to be able to draw down those funds, because the solicitor will have a little bit more work to do to ensure that the lender's legal requirements are satisfied.
I'd like to invite Lucas Chong from Select Property Group to come and share with us this exciting new development in Manchester called 360.
Thank you, Rachel. Hello, everyone. I'm Lucas Chong from Select Property Group, UK's leading property developer. Thank you once again for joining us today, and I hope everyone is keeping safe. Today, we'll look into the UK property market, as well as taking a deeper insight into the Manchester market. Apart from that, we'll also look into the details of our latest residential launch, 360 in central Manchester. Select Property Group, we are a UK leading property developer. We specialize in building different asset classes in their best emerging market so that we can achieve the best returns for our investors worldwide. Currently, we have over 13,400 units of properties, whether it is in UK or international properties, delivered or in a pipeline. We have about £2.1 billion of property sold globally to date. And in terms of rental, we have distributed approximately £154.4 million to our investors worldwide. Our headquarters is based in Manchester, UK, with global offices in Dubai, Hong Kong, and Shanghai, as we want to be close to our investors worldwide. Now, for those who are familiar with Select Property, these brands might come in familiar to you. These are the 4 main brands under our different asset classes under Select Property Group, whereas Crown Street would be a partnership between Select Property and Renica, buy-to-let residential in central Manchester, known as the Skyscraper District. And today's launch, 360, will be under the Crown Street portfolio. Now, looking into the UK market, a lot of us, when we look into venturing into investing overseas or in the UK, often we want to know which is the best region to look out for best growth and also in terms of consistent rental yield. Now, looking at the past data of the UK market as well as the future projection for the next 5 years, the top performing region has been in the Northwest area at 18.8% in terms of 5 years forecast, as opposed to UK national average, which is looking at 13.1%. Now, many of my clients believe that London is an area to look at. If we look at London, the growth projection has been relatively more stagnant. I believe this is similar to Singapore and Hong Kong, where prices have gone up fairly, which is why the room for capital gain has been more stagnant. Which is why over the past 5 years, the Northwest area, which is where Manchester is located at, has been consistently the top performing region. And one may ask, why are the North area growing so quickly? Now, it really goes down to this master plan called the Northern Powerhouse. Now, the Northern Powerhouse was a master plan announced in 2015 by the UK Prime Minister. And the main objective is to divert the UK economy from London to northern cities. And Manchester has been firmly identified as the core city for this master plan. Now, which is why apart from the property market, if we look at other sectors of the city, it is heavily supported and funded by the UK government, which is why the property demand as well as the value has also gone up significantly. And worth to mention, two of the major investment projects following the Northern Powerhouse Master Plan would be the High Speed 2, which I believe most of us will be familiar with, as well as the airport expansion in Manchester. Now, High Speed 2 is a train line starting from London and ending in Manchester Piccadilly train station. This completes first phase estimated in 2026. And when this completes, it will reduce the travel time from 2 hours to approximately less than 1 hour time by half. So that increases the connectivity between both cities. The Manchester Airport expansion is also a large expansion in the market. This is a £1 billion expansion estimated to complete sooner, which is in year 2023, to create a super terminal. So once this is completed, it will be the third largest airport apart from Heathrow and Gatwick, and that also increases the economy of Manchester as a city. And once this is completed, of course, we do get more connectivity and direct flights going to Manchester without having to transit in London. For example, Emirates, Hainan Airlines, Singapore Airlines, Cathay Pacific, United Airlines are some of the airlines that will have new flights going into Manchester. So now we do have direct flights from Dubai, Singapore, Beijing, Shanghai, Hong Kong, as well as New York. So as you can imagine, connectivity, economy of the city will be vastly boosted. Something more relevant to the property market as well, apart from transport improvement, one of the major initiatives taken by the Prime Minister is to incentivize FTSE listed 100 companies to either move their headquarters or operational branches from London to northern cities. And a lot have moved to Manchester, to name a few: BBC, Amazon, Siemens. And one of the bigger recent moves will be the headquarters of Booking.com, which is moving to central Manchester. So from this, it does create very high population growth in the market. The population growth in Manchester now is currently 3 times higher than the UK national average, which is why rental demand is very high in Manchester at the moment, and rental yield is also much higher compared to the UK national average. As a whole, population growth is currently rising at 3 times faster than UK national average. And we do have 58% graduate retention rate. As we know, Manchester has been famous for universities, and a lot of students and postgraduates are staying back to work as well. We have 61 million annual visitors going to the city, and estimated 55,000 new jobs to be created in the city centre alone by 2025. And without further ado, let's look at our Manchester first cylindrical skyscraper, a 360 located in Zone 1, Central Manchester. Now, 360 is a partnership between 2 developers, Select Property Group and Renneker. Renneker is also a leading developer in Manchester, and in this case, they are the builder for the development. Now, this is a proven partnership, as previously we have launched Victoria Residence, Elizabeth Tower, and The Blade in the same vicinity. And 2 of those properties are now completed and rented. So a very proven partnership here for this Crown Street portfolio. And when it comes to property, it's always about location, location, and location. So I'd like to share with you on the location of 360. Now on the screen here, we are looking at the zone 1 of central Manchester, going from Selfridges and Harvey Nichols on our 12 o'clock, as we can see here. These are the main shopping district in Manchester. Now as we go down to Deansgate Road, we go to Spinningsfield, and Spinningsfield will be the area for Central Business District. So these are where most of the main offices are located at, and also our targeted tenant market. Castlefield is a premium leisure area. And going down, we've got the site of 360. Now this is only 5 minutes walking distance to the Deansgate train station, and within 7 to 10 minutes walking distance to Spinningsfield, the Central Business District. And going down to 6 o'clock will be Oxford Road, that will be our university area, and Piccadilly train station will be the new intercity train station that goes out to other cities. Now the value of 360 as a location really goes down to the master plan called the Great Jackson Framework. Now, as we can appreciate, Manchester has also grown well over the years, and certain regions are in fact maturing. Similar to M3, M1's main shopping district, we can see per square feet prices are higher now. There's no more new land for new builds, which is why the Manchester Council, they are creating a city centre too, known as the Great Jackson Framework. And we do have very specific resolution on what's going to be built here over the 10 years master plan. Now, the Great Jackson Framework started in 2017 and will comprise areas of residentials, commercial sites, offices, schools, nurseries as well. And looking at the position of the Crown Street portfolio, as we've mentioned earlier, on the top area, we've got Elizabeth Tower and Victoria Residence. Now, both residentials are completed. Elizabeth Tower, in fact, newly completed in January this year. We've got position of the Blade in between, and also 360, as we can see, would be the cylindrical shaped tower. In the middle of the 4 towers, we've got a courtyard garden with public car park spaces available for the residents. And this will be an image of the area with 360, the Blade, Victoria Residence, and Elizabeth Tower under construction in this picture. Key information of the development: completion date for 360 is in Q4 2024. It comprises of 51-story tall building with residential floor starting from level 2 to level 48. Now, the service charge is estimated to be £2.75 per square feet. This is payable once per year. And building insurance is estimated to be at 50 pence per square feet. The ground rent will be at 0.1% of your property price, maximum cap at £500 per annum. 10-year structural warranty in place. And one thing worth to mention, the leasehold tenure for this development will be at 950 years, which is much higher compared to the typical 250 years in the UK. There are 3 basement levels of accommodating private car park spaces and bicycle spaces as well. And apartment ceiling is at UK standard height 2.4 meter. Features and amenities. Now, 360 is one of the very few developments in the market that has very comprehensive lifestyle amenities, ranging from 24/7 concierge to private meeting rooms, private dining area. We've got co-working space available, which are the features that is desired by the Gen Y tenant in the market. 360 also has one of the largest gymnasium with a separate studio, sauna, and steam room as well. Now, on level 2 of the building, there is an opening terrace going to the podium that connects to the Blade as well. So as you can imagine, a very open, bright area for the development. And going back to the master plan, Great Jackson Framework. Now, this is a plot under the Great Jackson Framework master plan, consisting of different plots. Now, plot A and C, as we can see here, are meant for residential use. 360 is located in plot C. We've got plot B and E, which are for commercial use in this case, and same for D and G, which are for mixed-use development. So this is a 10-year master plan starting from 2017, which is also the current priority regeneration area for the Manchester Council. Now, currently, we've got plot A and C coming along with residentials partially completed. Plot B and E at this instance is still vacant, but there will be commercial sites coming up in the next few years, primarily Grade A offices and shopping districts. In this case, when these are completed, as you can imagine, it will add benefits to the rental value, rentability, and also the value of your unit. And this will be a mock-up CGI of the Great Jackson framework. As you can see on plot A, we've got Deansgate Square, which are the earlier residentials to be in place. And for those who are familiar, we've got Victoria Residence and Elizabeth Tower, which are newly completed. Crown Street Primary School has also been approved. Planning permission is currently under construction, and this is located just beside the Blade. This is at 2 and 3-story tall, estimated completion in year 2023. And on here, we can see the position of 360, which is located beside the Blade. Very iconic tower. And in the middle plot, we have our commercial plot, which will be upcoming in the next few years. So this location, Great Jackson Framework, is also strategically located in between the main city center as well as a neighborhood courthouse. So it is furnished with schools, nurseries, research, healthcare, as well as Grade A offices and shopping centers, which is why currently it is the fastest selling development in Manchester as well. And looking at the floor plan of 360, now this is a typical floor plan consisting of 1 and 2 bedrooms. So we do have the 1 bedrooms in green, 4 units, and the blues are 2 bedrooms. Typically for rental market, 1 and 2 beds are the most desired for rental. And on a higher floor, we do have large 2 bedrooms. So these are larger 2 beds, as well as some 3 beds available.
Now let's move on to the hot picks for today. So as Lucas mentioned, 1 and 2 beds are really highly rentable. So for the 1 bed hot pick, we have picked one on the 3rd floor that has an internal square footage of 575 square foot. The price point is about £251,000. This brings the price per square feet to £435. Now looking at the layout here, it is quite efficient. There is no wasted space. Your bedroom is segregated from your living and dining area with an open plan kitchen concept. So based on the purchase price, what are the payment terms like? So for UK properties, we do what we know as deferred payments. So for a booking fee upon reservation, you just need to pay £5,000. And for an illustration, if you book your property on the 28th of Feb, the first deposit that is due would be within 28 days. So a month later, 30% is due for a 1 bed. So this 30% would be minus the £5,000. This would be paid in cash, and then you do not pay anything else until completion. So for 360, the completion is in 4th quarter 2024, and the balance 70% is due. So this is the part where if you need a mortgage, this would come into play, and you, like what Scott has mentioned earlier on, you will probably start looking for your mortgage application in the early year of 2024. So this unit from the site plan is facing south, it's facing towards Cheshire, and this would be the vantage point of your unit. Of course, just to take note that this view is taken from 20th floor. So you will be facing this direction, open fields and low-rise residential, but the angle will be on a lower tier because it is the unit that we selected is on the 3rd floor. So some CGIs on what the 1 bed looks like. So for a purchase price of £251,000, your expected rental value for a fully furnished unit would be about £1,100 per month. So this translates to a gross yield of 5.26%. Scott, would you like to bring us through the mortgage agreements if the buyer would like to take up a mortgage?
Sure, thank you. You can hold on to that. So yeah, just as I mentioned earlier, remember when we were saying about, borrow 70%, you've paid your 30% deposit already. So the lenders are not looking for any more money from you unless you want to put down more money and borrow less. That's completely up to you. And then let's use that baseline where the mortgage payment must be at least 100% of the rental income. Okay? So take the top one, 70% loan. You've got 1,100 here is going to come in every single month. So if you said, okay, Scott, I want a 70% loan, but I want to pay it off over 15 years, the lender's going to say no. because your mortgage payment is 1,255. That is more than the rental income. But if you wanted to pay it off over 20 years, yeah, the lender can say yes to that. It's the exact same mortgage, exact same rates, exact same fees and charges. If you wanted to do 25 years, then it's even cheaper. And then if you did go for the interest-only option, then it's even cheaper again, £512. Something I failed to mention earlier, which I should have, and I'll address it now. If you do choose this option, what most lenders allow you to do, they give you a 10% allowance every year to pay the principal when you want to. So you can still reduce the principal amount at any point during the process. So you can enjoy the reduced cash flow demand and higher profits from the rent. And if you do have excess cash, once a year you can pay off that 10% extra if you want to. Okay.
Thanks a lot, Scott. So right now, let's look at some financial figures. So I think this will be very interesting for your investors out there. So like what Scott has mentioned, if you are taking an interest-only repayment, based on the loan-to-value at 70%, this is your loan amount. And at a 3.5% interest rate, your monthly mortgage repayment is about £512. Also not forgetting like the estimate lender arrangement fee at 1% will be equivalent to this, and the broker fee would be this. Some other costs for you as a landlord, you will have annual running costs such as ground rent, service charge, and lettings agency fee. So these are some of the numbers that you need to take note for the annual running of your property. So what are your initial upfront costs then? So for a buy-to-let property, as an investor, you have to pay a buyer stamp duty. This buyer stamp duty is only payable upon completion. You don't pay it now. So at the fourth quarter of 2024, that is when you need to pay the stamp duty. And for the purchase price for the one bed, this is equivalent of what you need to pay, which translates to about £15,085. So this is roughly about 6+%. Of course, you also will have to pay your solicitors. So there's legal fees and miscellaneous disbursements that you have to pay. The mortgage fee is what is added from these two rows over here. So your total cost would be £25,296. So your total cash outlay, what is it then? For an investment property, you need to pay 30% cash upfront because your loan is 70%. So 30% of the purchase price, in addition to this figure over here, that's what you get. So this would be your cash outlay, £100,552 for a one-bedder. So moving on for a two-bed scenario, we have picked one on the higher floor. Earlier, we picked one on the third level. So this is a two-bed unit on the 28th floor of the building. It has a very generous internal square footage of 957 square feet. The price is about £410,000. So PSF-wise, it's still comparable to a one-bed. You can see from the layout here that although it's located in a cylindrical building, you still have a very well thought out layout of space. And in terms of the payment terms, the booking fee is the same at £5,000. However, just to point out, the first deposit now is 20% and not 30% from like the one bed, and your balance of payments is 80%. So looking at this is where the two-bed unit is located at. And this is facing Savills, which is towards the city area. And this is a vantage point on the 20th floor, and this is what you're looking at. So a very nice city view. So for a two-bed, what is the expected rental? It's about £1,800 per month. And this also translates to a gross yield of 5.27%. Still comparable with a one-bed. So based on the purchase price, what are the loan repayments like? Scott?
Thanks, Rachel. Is that on?
Yeah.
Yeah, thank you. So as I said before, really, and it's similar to the one bed, if you're going to go for the 15-year or the 20-year, then you can see it's only at the 20-year that the lender's going to start being open to you because of 1800 versus 1664. 25 years also can, and 837 can all the day long, because you've got almost £1,000 a month spare there. And the bigger the difference is, makes it much easier for the lender to say yes, which, again, being completely open, is why most why most investors then choose this piece there. They want to maximise that cash flow, especially if you're going to buy one or more in the future, and make sure that that rent is coming in, and just gives you the flexibility so that on a contractual basis, you don't have to be paying £1,436 per month. You can if you wish, but your minimum payment every month would be that, and it just allows you to have the control over and above that. Okay, thanks.
So moving on to some figures, financial figures for the two-bedder. Still the same thing. The only thing is because the loan amount will be a bit higher, so your lender arrangement fee would be a bit higher. Whereas your annual running cost, because it is now, the service structure is based on a bigger internal space, so this translates to a little bit higher annual running cost for yourself. Stamp duty as well for a buy-to-let property, and as a foreign buyer, this translates to 30,982, which is about 8+% of the purchase price. Now the legal fees as well as the furniture package is increased as well. Not forgetting that because most tenants expect your unit to be fitted for them, so as a landlord, you would have to actually include a furniture pack at the end of the day when you want to rent out to your renters. So the total cost that you need to pay would be £44,621. And adding on to 30% of the purchase price, that's where we get the figure here. So the total cash outlay for a two-bed would then translate to £167,568. So now let me show you this video on the construction of the 360.